Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on Dalal Street. Now, Indian markets snapped its two-day muted run to post healthy gains on Thursday, the weekly F&O expiry for Nifty 50. Today's charge was led by the surge in the banking and the financials as well as realty stocks. But we'll get to the drivers in just a bit, but let's look at the closing levels first. Nifty today ended about 0.66% higher at 21,658 mark, whereas sensex added about 530 points to close just shy of the 71,900 mark. As per the Fibonacci retracement levels, the Nifty has recovered almost 50% of the entire fall from the record high of 21,834 to the Wednesday's low of 21,500. Now, the reason I say almost is because the 50% retracement level works out at around 21,667 mark. We were there at provisional close, but ultimately settled about 9 points below it. So, for all practical purposes, we are there. The next level to track on Nifty 50 would now be 21,706 mark, which is the 61.8% retracement level, and then 21,762, which is the 78.6% retracement level. Now, moving on to the broader markets, both midcap and the small cap indices scaled a fresh record high today. Nifty Midcap 100 in fact moved past 47,000 for the very first time, and the index was also able to close above it. It closed just above the 47,300 mark, just about 36 points shy of the record high. The small cap index also added about 1% and ended at 15,339 mark. I think what makes a better case for the bulls, in fact, in today's recovery is the correction in India VIX. India VIX, the fear index, slipped by about 5.44% and it is now below the 14 level. This is for the very first time since December 22 and the lowest level since December 15th. Shifting focus to sectors, all sectoral indices on the NSE closed in the green. Nifty Realty was a top gainer, rising about 6.5% today. The index has also in fact hit a new record high in today's trade. Now, the surge in realty stocks comes on the back of a bullish report from Motilal Oswal, which picked Sobha, one of the constituent stock, as its top pick for 2024. Other indices that surged over 1% include Nifty Bank, Nifty PSU Bank, Nifty Private Bank and Nifty Financial Services. Nifty Bank, for instance, which remember, it corrected by about 1150 points since hitting a record high on January 28. Now, that has recovered about 61.8%. In fact, over 61.8% of the entire fall to the recent low. What's more impressive about this rally is that the index was also able to close near the day's high as well. But with that, let's also bring on board Mr. Rohit Srivastava, founder and market strategist at indiacharts.com. Sir, thank you for joining us here on News 9. Always a pleasure to speak to you. Now, Indian markets pretty much bucked the muted trend that we were seeing in global equities overnight to post healthy gains, and in fact, we closed near the day's high. What do you think led to today's price action?
Well, it did appear a surprise because global markets were pretty much down and quite substantially in some cases. You would have normally expected our markets to at least open down, but they actually gapped up. Now, the only reason I can think of is that this is the expiry, the weekly index expiry, and probably that got all the shorts squeezed on the wrong side. No particular reason is clearly understood. But that's the only logic I can really apply to why it would go against global equities and move higher, or at least gap up at the start. Then of course, from there on, it was mostly covering into the end of the day.
All right. Now, Rohit, the last time you were here, you had flagged caution and indicated that investors should perhaps wait for a better opportunity to enter markets. We have corrected from those levels and we have even recovered quite a bit from there on. So, is now a better time or is the view still cautious?
No, I think the view is still cautious because what we have seen is a very, very small correction. I think we need to see something a little more substantial What we can't rule out though is in the very, very short term, because we haven't broken a key support at around, say, 21,500. We can't rule out that this move stretches toward 21,900. But of course, that's not necessary. So don't take that as a certainty, but it's an open case. Having said that, I would like it to really pull back quite a bit before we can say that this is done. And by quite a bit, what I mean is a retracement of the entire rise that we've actually seen from the October lows. So even if you put a 50 or a 60% kind of retracement to this last rally, we would end up at around 20,300 is 50%, and 61% is around 19,940. So something of that nature is what I'm really looking for, and most likely it should happen in this month, because January has been a historically weak month, especially when it comes out of a very strong previous quarter. So if you've had a strong move in the prior months, the new year often starts with a correction. That's what we've seen. 7 out of the last 10 years have been weak. And that is why I think caution should still be, the mandate here. In fact, it's not only that, we can even look at things like some of the sentiment measures. If we look at the positioning by institutional investors, FIIs essentially have long positions near the top end of the range, anywhere between 70,000 and 100,000 contracts long over the last couple of weeks is the top end of the range. And on the client side, we actually have a short position, which is sort of was at the highest since 2017. So it's pretty substantial. And when you get these kind of extreme setups, it is a time for reversal. Only thing is you need to time it, which is why we really need to wait for the proper sell signal break of certain levels. I think 21,500 should be that level. If it breaks, then that would be a sign that the slightly deeper correction down has started.
And what about this recovery that we have seen in the banking pack? Nifty Bank, it gave up about 1150 points or so from the record high levels. Now we have in fact recovered half of it, in fact more than half of it, and we are back above 48,200 mark. What's your take on the Nifty banking pack?
Yeah, so on the Nifty Bank also, I would put levels like 47,600 to be a key support unless we really break that, or 47,400 to be even more sure. We do have a case for it to go up to the top end of the range, which is closer to around 47,000. I'm sorry, 49,000. And so that's the range we're looking at, between 47,400 and 49,000. It's gyrating. I think as in when it breaks the lower end of the range, we will see a deeper correction. I'm not really looking at above 49,000 right now. Also, no certainty that it gets there, but it remains open as long as we don't really break the lows.
All right. And Rohit, the volatility has also subsided in the last few sessions. I remember when we last spoke, we were at India VIX was at somewhere around the 16 mark. Now we are back below 14 sort of levels, and that too on a day when we saw, such a brilliant recovery. What does this indicate?
So a large part of that, VIX spike was on the back of futures premium, which means a lot of people who were bullish had rolled over their positions from December to January. That rollover premium, which was the highest, I think, on record, was really causing the VIX to move up. So at that point of time, it was an indication that people are overly bullish, and therefore there's a case for caution. Now, of course, post expiry, the premiums start dropping, and which is why the VIX is cooling off. We haven't seen a very sharp drop in the market for the VIX to spike. And I think that is something that we will only see when the corrective phase probably starts. So as of now, all it's reflecting is cooling off of the premiums that had become very, very high, close to rollover.
All right. And moving on to sectors, JPMorgan has changed its stance on the Indian IT stocks. Back in October, the brokerage had declared FY24 to be a washout year for the sector. Now it has upgraded the entire sector to neutral. It has also upgraded some of the top heavyweights like your Infosys and L&T to overweight, while others including TCS, HCL Tech and Persistent have been lifted to neutral from underweight. Now, from a valuation standpoint, is the sector now looking attractive?
So that's a very tough one, because valuations are high. And one of the reasons they are high is that interest rates, around the world had become substantially low. And because there's liquidity still around, we've become used to the idea that the valuation regime is, higher for longer. So because of that sense that, high valuations are okay, we have started to consider high valuations to be cheap. That is sort of what the mental regime shift has happened. The problem here is that if at all interest rates remain high or move up again, then at some point of time, valuations would not be justified. So the whole catch here or the whole call is that interest rates come down. That is the only way that you can actually justify higher valuations in the market without significant growth. Now, of course, Indian markets have seen some amount of growth, but even then, some of the valuations can appear loftier than they would have usually been at any previous point in history. And that is why it's taking some time for us to get used to it. And like I said, the key factor is liquidity and interest rates. And that is a risk actually. If interest rates do go higher, and I think there is a case for rates to remain higher, even though the US Fed has pointed to the possibility of lowering rates, they haven't really done anything. And the bond yields may be at a point where they can actually turn up again, and that can cause some level of disruption when it comes to valuations.
But Rohit, on the whole, the IT, at least India's IT pack or the large Indian IT companies, they were relative underperformers compared to their global peers. We saw a 45-46% rally in Nasdaq, whereas Nifty IT, even though it surged about 20%, we were still a far cry from the kind of returns that we saw in global markets. So don't you expect some bit of a catch up to happen this year?
It's a maybe not, because a lot of that predicates itself on a US economic recovery and some of the problems going away. And the Indian IT sector, basically the growth has been coming in the mid-cap IT, which have actually managed to move away into products and where they're not completely dependent on just simply the manpower argument as far as business is concerned. So there are multiple different angles, 5%, 8%. Which is way below par. There are stocks which are growing earnings at 20-25%. So why shouldn't I really allocate capital over there? So in that sense, I wouldn't really be interested in large cap IT. It's only the mid cap IT where growth can get justified that you'd actually have some interest.
And what are you making of this run that we are seeing in realty stocks? Nifty Realty today hit an all-time high, and this is after the sector giving about 78-80% returns in 2023. Do you expect this bull run that we are seeing in realty counters to continue this year?
Well, a year is a long period. If we take a 1 or 2 year period, then definitely would feel slightly positive about the sector. But remember, reality also has a lagged effect. So when we say, okay, we should be cautious on the markets often are ahead of reality. Reality works with a lag to markets, meaning that even when things are down, equities pick up first, and it's only after a lag of maybe 6-8 months that the reality sector picks up. And similarly, when equities are closer to the peak, reality sector continues to do well a while longer than equities, and that is why you're actually seeing that lag effect still going on. So it can last for a while. I don't know about a year. Year is a long period. We really need to judge the market situation probably by the end of January to take a slightly longer term call. But I think that's the only reason we are seeing the spike in the reality sector.
All right, that's the view coming in from Mr. Rohit Srivastav. Sir, a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you. Thanks so much.
But that's all we have in this edition of Last 6. Stay tuned with us as we have Business Plus on the other side.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a